Here's one potential scenario I'm watching for on Ether. This is ETHUSD. I have a 2-hour chart pulled up and I've drawn out a basic Wyckoff accumulation schematic. Now, to be clear, it's still far too early to tell whether something like this could happen, but if it does play out, I think it would lead to a lot of pain in the market, and I think that would present a fantastic opportunity to get long and potentially make a lot of money. Now, we know that a lot of people are in long trades right now. We know that a lot of people bought the dip last week, probably believing that a generational low is in and that much higher prices will follow from here. And if that happens, that's great. I'm more than happy to ride price up. However, if something like this accumulation schematic were to play out, then 3 important things would happen. First off, the people who are in long trades and who have their stop losses underneath this low, those stop losses would be triggered and those people would be kicked out of their trades if price were to take this low. Second, the people who have market sell orders resting underneath this low, who think that if price comes down here, we're going to get a massive move to the downside and they don't want to miss out on it, those orders would be triggered, and if price were to start coming back up, those people would be underwater. Number 3, similarly, anybody who's looking to short a retest of the bottom of the range, those people would be underwater. Their trades would be losing trades if price were to start trading back inside the range. Now, if this scenario were to play out, the opportunity to go long would be to try to enter a trade off the test of the spring or off the test of the down move that sponsors the break in structure here. 3 more key things. Number 1, in terms of targets, the first major target would be around the top of the range. The second major target would be between about 3.6K and 4K, which takes into consideration some higher time frame structures as well as a measured move of the trading range, basically a 200% extension. Number 2, in terms of what would invalidate this idea, what would lead us to say no, this actually isn't Wyckoff accumulation, if from here price were to start trading considerably higher than the top of the range or considerably lower than the bottom of the range, then we would have to abandon this idea and look for another trade setup. Number 3, if you want to learn how to take advantage of this setup and more specifically how to go long off the test of a spring, then you should definitely check out this blog series here on Wyckoff trading from Bruce Fraser. You can find this series by Googling the title of this article. So search the article title on Google and then click the article for stockcharts.com. After you read through this article, scroll down to the bottom and you'll notice that there's a button that says next. You're going to want to read through the next 15 or 20 articles in this series and don't stop until you've read through the entire section on accumulation. You'll then be in a position to take advantage of this trade setup if it plays out.